Hey traders, and welcome back to another fresh drop of Market on Mic. Oh, it's been a while, right? So you already know that this is your go-to pit stop for all things trading. And when I say all things trading, we're talking about the market and most importantly, money moves. I'm your girl Natasha, and of course, I'm not alone. I have here with me.
All right, guys, and Daniel, and it's good to be back for another exciting episode of Market on Mic. So,
Yep.
like last week, I'm sure you guys must have been wondering, is
Where did
this
we
week's
go?
episode,
Yeah.
right? Sorry about that, guys. Some things came up, so we skipped last week, but
Some things.
we actually. So we actually had to skip last week, but we are here with a whole lot of energy and a whole lot of update for you guys. So whether you're tuning in from the chat station or probably you are in the traffic or you are sitting in your bedroom or your sitting room or you are in the coffee shop, wherever you are, this is actually for you.
Yes, guys. And today, this episode, we are here to unpack a whole lot. It's just the middle of July, but if you've been on the market, you would know that a whole lot has happened.
July has always been that month where comes with some level of uncertainties, surprises,
I think we said this in our last episode. We're already in the mid-year.
Yeah,
right.
True.
We're already in the middle of the year, and this is where everybody, including economies, are re-strategizing. Everybody's going back to look at, okay, what have we been able to achieve from the beginning to the middle of the year, because we cannot go the rest of the year and not make something profitable. So today we are unpacking a wild mid-July. And we're going to be looking into Forex, we're going to dissect commodities, and we're going to break down the big indices, right? It is July 16, 2025, and believe me, guys, the charts are screaming today. Like, if you've been on the market today, I have screamed. I don't know about you, but I have been screaming ever since
there had been a lot of shocks, and some of the most recent news events that has been moving the market has been the CPI data, the PPI data, and threats from Trump to fire Powell. It has been moving the markets.
Oh, yeah.
Yeah, so we've actually got some big moves and shakers for you guys today, so that you guys can be up to date on what has been happening or what's actually moving the market presently. Are you ready to capitalize on this shift?
Definitely.
Or get caught off guard? I'm sure you don't want to get caught off guard, all right? So let's help you stay ahead, guys.
Yes, so let's kick off with the currencies corner. So I'm sure, and Daniel, the US dollar is still playing hard to get, right? It's actually just showing resilience even with a softer PPI reading today.
All right, Natasha, you're actually very, very correct on that. So the dollar got that undeniable growth or strength rather. And that has been because if you look at the way the US dollar has been since the beginning of this year, has been very weak. And that has been due to tariffs.
Yeah.
It has been due to the US tariffs, hitting different economies around the world and the like. So it has caused a whole lot of weakness to the USD. But now recently, we are beginning to see that from the inflation data, the CPI and the PPI data were released earlier this week. All right. And we could see that the expectation of the inflation, the rise in inflation is not as expected. Right? It's more or less that inflation is slowly growing compared to how fast maybe speculators would have anticipated inflation to grow over time due to the tariff. And it has really been giving the dollar some certain level of strength from last week to going into this week, and it has been really exciting. So while the US PPI data for June came out lower than expected, showing about 0%, which means that from the producer's point of view, there were no inflation that actually came into the economy last month for both headline and the core PPI. So the dollar itself isn't retreating so much, but it's actually consolidating against the euro. The euro is actually under a lot of pressure. And earlier today, we saw a huge move to the downside on Euro USD. And that means the dollar is actually getting a whole lot of strength.
Yes, and if you followed us from episode to episode, especially times where we talk about the market, we already know that the weakness of the dollar, we're definitely going to see a turnaround.
Yeah, true.
And at this particular point in time, I'm wondering, is this it?
It's funny how the dollar doesn't stay weak for so long.
Yes, but I think it has actually done quite a while, and it was expected looking at the tariffs. And economies were also not playing, because as much as Trump was slamming tariff on them, we saw them doing theirs right back. I mean, we saw how it went with China, and how that also weakened the dollar the more. Now, looking at the fact that CPI came out, and definitely from the beginning of all this tariff, we were thinking, oh, the US is going to suffer based on certain things. And looking at CPI in the month, and it didn't grow as much as expected. But yes, you could still see a little of tariff there. And this is sending investors on a happy ride with the dollar, because if inflation still is looming around, definitely we might not get to see any interest rate cuts this year.
Well, and if we're not seeing any cut this year, that means we could see some level of rally to the upside.
Exactly, yeah. Well, now with Trump coming out saying that, I mean, even if he has debunked it already, we've been talking about this fire portal thing for a while now. And we saw it play in the market again today. Yeah, I don't know if that's just Trump's way of, okay, let me just shake these people up a bit.
Because if it's probably shaking people up, it gave a whole lot of negative sentiment to the dollar itself.
Yes, and you can see that the dollar almost lost all the gains it made yesterday from the CPI. And Trump is back to say, oh, no, that's not what he meant. But we're just going to see about...
I've actually been thinking, because if you look at it, the tariff was not totally eliminated. It was just paused for 90 days. And that 90 days is coming to an end at the end of July.
Yes.
So now, if you're looking at it, the tariff actually cost the dollar to be weak. And that's 30 or 90 days span expires by the ending of July. So it doesn't mean that coming into next month, August, or how long do we think this strength in the dollar would get to increase?
So we know that this tariff that Trump is just slamming on different economies, he always gives them that pause to come back to renegotiate. Right? So based on probably what the renegotiation might be, we might actually see it still, drive the market for a while.
True, that makes a whole lot of sense. So, but we'll also love to hear from our listeners what you think.
Yes, of course.
So, you can also put in the comment section what you think about how long do you think the US dollar strength could stay? Is it going to be for the rest of the year, or is it just going to the dollar, or is this just a fake out on the strength of the dollar? And also, with softer US inflation data today, do you see the Fed softening its stance, or are tariffs now the bigger game changer for the dollar? That's a good question for our listeners, though.
Yes, if Trump is actually looking at buying more, maybe they're actually not looking at cutting interest rate.
Yeah, true.
To get him to that point, to probably give a hint, maybe it's time to just fire this guy. Maybe they're talking about, no, we cannot cut interest rates at this point, because we know that ever before even Trump came in, he's always been a dovish guy. Let us cut interest rates, let's cut this, let's cut it. And with the fact that we saw this somewhere in the last 2 months, right? And we're seeing it again. It shows that probably Powell is still very hawkish.
Yes, very good. And for the fact that the data is even giving him a whole lot of stance that I'm a hawkish person, right? Inflation is still very much hovering around the economy. Why should I cut rate?
Why should I cut rate? Exactly.
So those are some of the things we should also get to look at. For me, I'm just going to be on the sideline when it comes to the dollar itself, because I'd rather just maybe treat gold market or the indices market.
Well, irrespective, the dollar market is going to, looking at the CPI when it got dropped yesterday, we saw gold retrace.
Well, I'm going to be very cautious. I'm going to be very, very cautious, though.
All right, guys. And now, moving from the dollar, we're going to talk about the yen. This is one market that I really do enjoy because it's direct to the point. But, we have a new king in the market, and, he's playing things quite differently. So we actually see that our USD continues its climb. It's been hovering around 148.80, and the Bank of Japan is sticking to its ultra loose policy. I don't think there's anything that can shake these guys.
Well, the Bank of Japan, they're an economy that spends, they export, and they also tend to import a whole lot too. So they're kind of economy that they are very, very key on their monetary policies.
Yes.
Very, very key. So they don't want to be extra loose to the extent where they are beginning to see inflation go out of hand in the economy. So that's why they try as much as possible
to keep it tight.
It's very, very tight.
And surprisingly, guys, even with some renewed global trade tensions, prompting a slightly yen strengthening today, the pair remained elevated. That is, the ongoing tariff concerns from the US are definitely casting a shadow, impacting global market sentiment and keeping the dollar supported. So just like you said, irrespective of your stance in the market, whether you are in the Forex market, the commodity market indices, you really still want to pay attention to the dollar because it is really holding on to every single instrument on the market.
Oh, that's very, very correct. That's very, very correct. And trust me, enough from currency. Let's go into the commodity market.
Yeah.
Right. So looking at the commodity market, let's look at oil's plunge, gold resilient, copper's historic surge. So we'll be talking about copper today, guys. So we want to see that. I know copper is not an instrument everyone actually has eyes on. But right now, guys, you need to start looking at it because money is flowing into copper.
Yes, guys. I mean, you want to pay attention to what is brewing in the market because there's always something brewing. There's always a new instrument. I remember how we found gold. That was back in 2020 during the coronavirus. And now we're seeing the global tensions and we're seeing instruments like copper, silver. They're just doing their things. So let's actually get into commodity right now, guys. So let's buckle up. This is where the action is. Let's talk about oil first, Daniel. WTI crude is plunging. What is going on?
All right, so during the time of the war, we actually saw WTI rising impressively, hitting about $80 per barrel. But Trump came and intervened. So there was a big news, and we saw WTI crude just sharply fell to about $65 to $66 per barrel. And since then, it has just been ranging, and the drop is primarily due to fears from global economic slowdown, which is actually weighing on the demand for oil. Despite the OPEC intervention on maintaining the production cuts, and also EIA's latest gasoline price forecast shows that price is actually more subdued than it actually expects. So it's actually just a significant shift in the market. So that's basically what has been causing the oil market to be a little bit shaky, unstable, and also the tariffs, demand, OPEC intervention, and the likes just been making the market a little bit. But since the war calmed down a little bit, we've not really seen so much on the oil market.
Yes, and guys, don't forget, so you're trading oil, you have to be as sensitive as it is, because this is one market that is fueled by demand and supply. It can move a crazy amount of people in a short period of time. I mean, it is reactive, right? Sure. So trading oil right now, you want to be very cautious, very, very cautious. You want to make sure that your account size is one that can hold irrespective of retracement. Try to manage your risk, your lot size, and all of that. So now over to gold, the star of the market this year, right? So we've seen that gold has been flashing its safe haven credentials. It's been hovering around $3,300 to $3,340 per ounce today. And after a brief dip yesterday following the US CPI, it's actually recovering. Like, I mean, by 4 p.m. today, you need to see gold. Just
wow, it was just a shock.
Oh my God.
Like, I saw gold down next minute. I'm like, what's happening?
Its head held high.
Yeah.
Proud. Going up, it's recovering, guys, and the geopolitical uncertainties, especially with the fresh tariff talks and persistent underlying inflation concerns, continue to make gold very attractive, even as the dollar remains strong.
You know, it's one of those times where you see dollar going up and gold
going up as well.
Exactly. So you wonder
what's going on.
So you want to actually keep your eyes on bullish opportunities for the gold market because those geopolitical uncertainties and possible tariff talks coming into play again may actually cause the gold market to continue its upside. And you know, gold now is actually finding this stability around $2,300.
Yes.
So definitely we could see the price pull back up 3.5 and probably create new highs.
Whatever retracement you might be seeing on gold, guys, trust me, I believe that it's just a way to keep market balanced, right?
Yeah.
I mean, if gold could just keep going, I think by now we should be at 5,000. But you see, we have to regulate price, and that is where your support and resistance comes in. So definitely, I feel whatever retracement, no matter how deep it might be, gold is just trying to get that momentum to shoot back up. Because if the dollar is doing so well at the moment and gold is still pushing up, it tells you that hold on to gold, guys.
Yes, hold on to gold.
Yes,
so,
hold on
guys,
to
this is a question for you. Probably you respond in the comment section. Are you rethinking commodity allocation with oil's downward move, or are you still stacking gold for safety? I want to know what you think in the comment section, guys. So then let's go into copper. And Natasha, what has been happening in the copper market?
And that's actually where the shocker comes in. Copper, it's no longer struggling. Daniel, it's hitting record high. It has surged 10% in the last week, trading around $9,604,000 per metric ton on
LME.
Yes.
All right. So, copper has actually been commodity that has been struggling for a while. Although the global price of copper now has just been sitting somewhere around $4 thereabout, and President Trump recently threatened about 50% tariff on copper imports. Boom, completely upended the market.
Demand and supply, guys.
We actually saw copper rise massively, 10% in a single. In fact, that what Natasha said, the 10% surge happened in one day. Happened in one day, and since then we've just been seeing the price of copper sitting comfortably around, I think, $5.8 last time I checked. And add that to rising demand from renewable energy and the electric vehicles, plus ongoing supply concerns, and suddenly copper is the hottest commodity around.
I'm telling you.
Yeah, so it's a complete reversal from.
Yeah, and a lot of people are looking at copper right now because as much as gold is still shiny and all, a lot of people are scared that, okay, this is at the highest high. So let us not join the market when, it has gotten to an overbought region. So you see people are trying to put money whereby it's just starting. So if probably you've been wondering, oh my God, gold is just high and I don't want to buy at the moment, copper is something you can always take a look at because it's just starting and you want to join the rally at this particular point in time.
So guys, this is something new. Aside from just gold, if you're complaining, is it just gold? Is it just gold?
Yeah.
Here is copper for you guys.
Yes, guys. So you can look at copper. So now let's talk about my personal favorite, the US Tech consolidation. Europe makes on inflation and tariffs. So Daniel, what's up? What's going on?
All right. So the indices market has actually been a little bit tracing from its all-time highs.
Oh my God.
Yeah. So the S&P 500, Nasdaq, they're actually showing a whole lot of caution. Right?
A whole lot.
Yes, a whole lot of caution.
My trade hit stop loss twice in one day.
I'm sorry about that, Natasha. I'm sorry about that. So we're seeing a lot of people. So more or less like all those rally in the US indices market has been paused due to ongoing tariff gradually coming to that's the pause on the tariff gradually coming to an end. So we're seeing a whole lot of caution coming into play, and also inflation, because hiking interest rates, a possibility of hiking interest rates is bad news for the stock market or for the
yes,
market.
Of course.
So those are like some of the things that have been causing the US indices market to pull back, although they still remain near their record levels. Yeah. But futures, they are actually edging slightly lower ahead of the CPI and PPI data.
Yeah, so we actually seen the Nasdaq is seeing some very slightly pullbacks around 0.1%.
Yeah.
And that is after its record high. And we're seeing some consolidations with mixed corporate earnings report out today. We saw Johnson & Johnson's rising, but cheap equipment maker, that's ASML, warning of flat 2026 growth due to tariffs. Those tariff talks are definitely adding a layer of uncertainty.
Yeah, so let's also look at the Europe. That's the UK 100. I'm sure you must be surprised. UK 100, you've never heard of UK 100. It's actually FTSE.
It's a thing, yeah.
Yeah, so the UK 100 is actually shaking off hotter than expected UK inflation that actually came out today. The UK 100, like you said, UK, that is United Kingdom. So that is actually 100 big companies in United Kingdom or in London or in Britain. Just know there's UK, right? And it actually came in about 3.6% year on year for June, which was higher than the forecast. And it's managing to hold slightly positive, largely thanks to commodity and energy giants that might be benefiting from copper rallying or have diversified exposure. So you can actually get to see that all these are even related. The copper rally, you're seeing energy giants, there's a lot of improvement, tech innovation coming to the energy sectors and the likes, and all of this have actually been giving the UK inflation a whole lot of boost, and also we are seeing that reflect on the UK 100. Natasha, what has been happening to the DAX? That's German 40.
I mean, I was speaking to a client today and he was like, I think somebody's watching me. He
Why?
It was funny because it's like, why is everything hitting my stop loss? It hits my stop loss and it's back up. It hits my stop loss and it's back up. And that's expected. We've seen that in the indices market, for the past week.
And funny, if you don't put stop loss, that's the day that it doesn't.
That's the day it doesn't. Right? Exactly. So just
now I understand the pain.
You want to put in stop loss. Uncle G said it today. He said, "Thank God for stop loss." I have never seen somebody so grateful for stop loss before, but guys, so the DAX is actually a mixed bag at the moment, and initially it's dipping due to border inflation. There was a time whereby inflation moved the market so great.
Yeah.
And then earlier this year, we saw the quietness of inflation data, and now it's picking up again. So,
that's the market.
Exactly. This tells that you have to pay attention, guys. So we've seen that this is just dipping due to border inflation worries and earnings. Later showing some resilience, ticking higher. European market generally are grappling with sluggish growth. We know that ever since the coronavirus, the European economy has been slow. It's been sluggish to get back up.
Yeah.
I know the growth concerns, and now this new US tariff threat would or could significantly impact trade. And even earlier in the year when Trump started, we literally saw some companies under the German trying to move to the US.
Yeah.
Because probably that's where they have one of their biggest markets. And of course, I'm not just going to lose my big market because I'm in a particular economy. So, that alone, it's for an economy that is still struggling, and having all of this put together, it's a tight one.
Yeah, it's actually a very, very tight one. So if you're trading on the DAX, that's the German 40 index, you want to be very, very quite cautious. Although this could actually still present some good buying opportunities. So you should also get to watch out. But if you're trading indices, the volatility from the news, the tariffs, and all of those information actually is what are moving the market specifically. So lastly, let's look at the crypto market. We are seeing Bitcoin hitting all-time highs at $123,000.
What are we doing with our lives?
I'm like, what's happening? Natasha, this is holding strong. Although there was a little pullback into $180,000, which happened today, but we saw it hit it got to $123,000 level. Despite some market uncertainty, there's still a strong buy on the dip. So it's more or less any retracement you're seeing on Bitcoin is just a signal for you to buy.
It makes sense. It makes sense if investors can really decide on, okay, what currency can I put my money, or okay, can I buy at where gold is right now, or even the indices, the tariff and everything. Bitcoin seems safe at this point in time. So it really makes sense that yes, we are actually seeing this rise in Bitcoin. But the real star today might be Ethereum. It is up nearly 6% today. Ouch. It's a steady struggling around 3,145 to 3,168. It even performed Bitcoin in Q2 of 2025. Come on. That's a big one. And we're actually seeing major institutions' interest. With Peter Thiel-linked companies buying into Ethereum strategies, and even the Moscow Exchange announcing an Ethereum ETF fund for August.
All of the sentiments actually.
Sentiments are playing. Yes, exactly. And the Ether Open interest has hit an all-time high, signaling big bets on its future. I think it's time I go back to it. I think
Really?
it's high time. Yes.
All right, so all of these institutional adoptions narrative is actually huge. So we're seeing even Standard Chartered, global systematically important bank, officially launching its spot crypto trading for Bitcoin and Ethereum, which is actually big. Imagine Standard Chartered coming in to launch a spot crypto for trading Bitcoin and Ethereum. That's actually
guys, this is what you should know.
Standard Chartered is one of the biggest banks in the world.
Exactly. So it tells you that right now, don't sell that Bitcoin, don't sell that Ethereum. Hold on to it, guys.
You're seeing economies, banks beginning to adopt crypto
Yes.
systems or payment methods. So, guys, you should actually consider putting your money or investing into the crypto market.
I never thought this would be. I would actually advise anybody to. But guys, this is not a financial advice. But look at look at your Ethereum and Bitcoin. There is something there for us, please.
Yeah. So overall, the crypto market cap might have hit slightly, right? Because we are seeing a little retracement, which is actually the signal to buy again.
Yes.
Right, especially for Bitcoin and Ethereum.
Yes, but let's not forget that when you want to look at this, especially when it comes to coins and all of that, you want to also pay attention to regulations. And on the regulatory front in the US, it's a bit of a mixed bag. Some crypto bills face procedural setback in the House today due to concerns over central bank digital currency. But key House leaders are confident that these bills, including stablecoin legislation, will get back on track.
Yeah, because having to bring in a new payment system definitely
that is another world power, right?
Yeah, you face some one or two few challenges. But at the end of the day,
yes,
it begins to, because Bitcoin has all of this Bitcoin having to come into having to face all of those regulations.
Yeah. Well, I think why most probably is scared about imputing things like this into the economy is because the fact that you cannot really trace most of this currency, like the crypto market. And we've seen where a couple of people have been smart enough to use it as their cash outs from illegal activities. Yeah. So it's like at the end of the day, if we're accepting something like that into the economy, that means a lot of crimes are going to go unsolved.
Yeah. That's why we are bringing all of these regulations in place.
Yes.
To be able to more or less track
and manage.
Not really track, probably just manage it properly. Right, and it's not just going to be a big thing that replaces other currencies.
Yes,
it's just the gradual. But at the end of the day, we're going to be seeing a whole lot of value coming into. I mean, this is a positive sentiment to the crypto market.
Exactly. Yes. I mean, the fact that it's on table, you're having a couple of people, leaders, looking at it and supporting it. I mean, I feel we have a long way to go for this particular market, and if you're able to tap in early, you can just join the ride full.
All right, so that brings us gradually to the end of this particular podcast. Just purely market updates. So let's do a very, very brief breakdown. So what has actually been on the radar since the beginning of this week and what we should expect for the rest of the month. All right, so we're seeing the full implication of the CPI and the PPI data. Will this encourage the Fed to consider early rates cuts?
We'll see about that.
So we're also looking at further development in the US tariff. Don't forget, at the ending of this month, we're going to be seeing that 90-day pause.
Yes, exactly. August 1st, to be precise. That's going to be the day whereby every economy gets to present their negotiation and Trump is going to say, okay, fine. No, So we're actually going to see, I mean, I think market is expecting, we want to see how far this rate cut or this tariff, is actually going to play into the market. It already has the bigger hand right here. So we want to see where does this end and where can we actually start seeing a much more convenient, stronger dollars.
All right, thank you, Natasha, for that.
And please don't just trade what you see, trade what makes sense.
Very, very
right. The market is incredibly noisy today, but smart traders adapt their strategy to these things. Shifting narratives.
Like Natasha rightly said, you want to have a clear direction with your strategies. Put your stop loss when you need to, and don't be over greedy. Take your profit when you have to, but trade what you expect the market to.
So that is it for today. It feels good to be back, guys. I don't know about you.
It feels great to be back, actually.
Yes, it feels great to be back. And of course, thank you for hanging out with us here on Market on Mic. Don't forget to subscribe, share with your squad, and leave us a review.
Leave us a review, like this particular podcast also. And all of those comments that you're supposed to put down in the comment section. Don't forget your take on, will the US dollar rally continue for the rest of the month, or is it just a peak out? Also, what you expect or what you think about the commodity market. Are you holding on to your gold, or are you going to be monitoring the prices of oil? So let us have all of that information in the comment section. Until next time, guys, keep your stops tight, use your stop losses. All right, your buyers, keep it very flexible. Don't be rigid on this is going to buy, this is going to buy. No, keep it quite flexible and make sure your mind is actually on point all the time. The next time, guys, see you in the market.
See you in the market, guys.
Bye.